Hi, I'm Gary Carmell, author of The Philosophical Investor, Transforming Wisdom into Wealth. One of the things that has set CWS apart over the last decade or so has been our unconventional use of variable rate loans versus fixed rate loans, which is much more widespread and more traditional in terms of financing the acquisition and ownership of properties. Most people are uncomfortable taking interest rate risk, not knowing if they're going to change overnight or over a period of years they could be much higher. So they want to essentially put that uncertainty or take that uncertainty off the table and fix their interest rates. We have taken a different approach, and sometimes it can be considered controversial. I actually have a whole chapter in my book, The Philosophical Investor, Transforming Wisdom into Wealth, called Go Variable, Young Man. And we had some negative experiences way back when we relied solely upon fixed rate loans. Because when you have a fixed rate loan in our world, the lender puts very restrictive penalties on borrowers that want to repay that money early. So if you have a 10-year loan and you want to pay it off in 4 years, they want to collect the difference in interest for the 6 years that they're getting their money back earlier, as if they had that money invested for the full 10 years. So it can be very expensive to pay that penalty to the lender for them letting you out of that fixed rate loan for a period of time. Variable rate loans, however, have a much lower cost prepayment penalty because they're not giving up anything. They get their money back and they just reinvest it at the prevailing interest rates. And we have found that the cost of financing has remained lower than the fixed rate alternatives, and at the same time, the flexibility to get out of the loans, either to refinance them or sell a property and pay them off with minimal penalties, has been very, very financially beneficial to our investors. I like to say that I have 3 children. I have my son, my daughter, and LIBOR. And LIBOR is the index that most of our variable rate loans are based on. So I study that very carefully, and my kids oftentimes say I spend more time with LIBOR than I do with them, and sadly that could be true. But it's a very important part of our strategy, and one that has truly paid a lot of dividends to our investors, and one we strongly believe in and continue to believe in. To read my latest thinking and to learn more about my book, please go to garycarmell.com.